In this module, we are going to discuss care with compilations. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, I recently attended the AGM of an MPO that I'm part of, and the handouts called Meeting Highlights included appointment of, and they mentioned the year, this year's auditor. And attached were statements with a compilation engagement report. Now, what was the risk to the CPA? Well, the first risk was that the members of the NPO might have assumed that the CPA was taking a higher degree of responsibility than a compilation. A compilation, there is no assurance and no work. And members of the NPO might have thought that the CPA was providing an audit level of assurance. And at least the board thought it was an audit, even if they didn't know what that might have meant, because they listed it as appointment of an auditor. So then I read the compilation report and the attached statements, and the report said that the accountant had compiled a balance sheet, and the first statement attached was a balance sheet. And then the report said that the accountant had compiled the statement of income and net assets, but the statement said statement of operations and changes in net assets. And then the statement included a cash flow statement, which is not required. It's an extra bonus addition. It starts to give the appearance that, I don't know, we did more than we said we did. There was no mention of the cash flow statement in the compilation report. The compilation report then mentioned Note 1, and there was Note 1 basis of accounting. And then there was also Note 2, nature of the organization, but there was no mention of that in the report. Now, what are the risks to the CPA? Well, the report said balance sheet, the statement said balance sheet, so that's fine. The report said statement of income and net assets, the statements had a different title. At very least, that gives the appearance of lack of care. Now, there's no mention of the cash flow statement, so lack of care at least, but leaves open the question. We haven't said that we just compiled the cash flow statement and we take no responsibility for it. So have we accepted a higher level of responsibility for the cash flow statement? Why did we do a cash flow statement? Adds risk to the CPA. Note 1, basis of accounting, that was required, so not applicable. Note 2, no mention. Again, what level of responsibility did we take? Should have mentioned it. Lack of care. And did we audit Note 2? I don't know. So then the report said, and there was a signature. Below the signature was the name of the firm, McGillicuddy and McGillicuddy CPA. And then exactly as I have indicated, capital D space, capital A space, capital T space, capital E space, and then the city was written. So this was obviously a draft financial statement that escaped from the CPA's office before they'd got around to removing the word date and putting in the actual date. So clear lack of care, and the date's required, and there was no date. So lack of care. Now, standards require sort of a representation letter. And I guess there's actually no place either in auditor review that we get a representation letter. It's just that standards require a whole series of representations, and we have, for convenience, put them in a single place in writing in a representation letter. So this letter was included in the report to members, and among other things, it said, it confirmed that the board was responsible for the statements, and that is in 4235. That is a representation that we have to get. So that's the first paragraph in my representation letter. And then it said that the board had approved adjustments made by you. And that's kind of 4241C. I dislike those words because it seems to imply that the practitioner has developed and obtained support for and made journal entries and taken responsibility for them. And I don't want to do that. The words in standards, which are a little bit clumsy, and I don't quite know how you put them in a letter, are entries, adjustments that the practitioner has agreed with management. And I actually kind of like those words. That's very non-committal. But putting in a letter, it would have to be the board has approved adjustments that have been agreed between the practitioner and management, something like that. The other word you could use is proposed if you want to be a little shorter, but that's required, and it was done, though I'm concerned that the wording used made it look like the practitioner was taking responsibility for making the entries, and the board had just approved it. Now, given that you're doing this letter anyway, and if you had known it was included in the report to members, you might have repeated the no use by third parties. Now, from the statements, there were probably none, but you don't know. The statements could have been provided to the banker because the banker asked for them, even though there were no loans. Could have been provided to an insurance company. You don't know. The deal in a compilation is that management has to identify all the people to whom they've given the statements, tell you that they've told them that they cannot rely on the statements, there's no assurance, and promise that if the third parties need any additional information, they will provide it to them. So we have no idea whether that's done before. So I just kind of would like to repeat that any chance I get, that there are no third parties that we have provided the statements to. So I'd say that again. And might have included, if we knew, again, this was being issued to the members, saying it's in the engagement letter, but it's not an audit, it's not a review, we are providing no insurance. And then that goes straight to the membership. Now, third parties are in the engagement letter, but I have two concerns, well, three concerns. First concern is that management may not have identified these third parties. Second concern is between the date of the engagement letter, which is at the beginning of the engagement, and the rep letter, which is at the end, a third party may have arisen. So I'd like management to confirm that that hasn't happened. And then it could be that after the engagement is complete and the representation and the engagement letter are done, a third party could arise, and I'd like management to promise that if that happens, they'll do all the things they are supposed to have done. Now, what should be in the rep letter? And I have another module on compilations, and you can look at what is required there. But just for the purpose of this presentation, what should be included in the rep letter? And there are things that are required to be included. But if you'd like to include more things, as long as they are in the context of we're not doing an audit, we're not doing a review, we're not giving any assurance, management's responsible, the board is responsible for everything, please go ahead. So, that the board was responsible for the financial statements, that was required and it was done. That the board has approved journal entries proposed. The wording was wrong in my opinion, but it was done, so that's better than not doing it at all. You might repeat in the rep letter that the board understands that there is no audit, no review, no assurance, and if it goes to other people, that's better. Repeat that there are no third parties, why not? Repeat that there are none since the engagement letter, and repeat that they will advise if there are any after. Now, again, I prefer this in writing. You could do it not in writing, I suppose. You could have a series of memos. But I prefer to have a standard letter, just as in an audit or a review where there are a series of required representations. I'd like them all in writing. I'd like it signed by management. It's in one place, so we remember to do them all. We get them all. And it's documented in writing. So I think we need to be, well, we always need to be careful about what is in the rep letter and make sure that everything is there. Audit and review rep letters get to be 4 or 5 or 6 pages long. Now, the other thing that kind of puzzled me in this particular circumstance was who this letter was addressed to. And in this case, the addressee was management of the not-for-profit. And then the letter was signed by a board member. Now, it's either management or those charged with governance, a board member. I would prefer in almost all circumstances, in every circumstance, to default to those charged with governance who are the highest level of management, the board, or both. The larger the organization, the more likely I would like to have the chief executive officer or the chief financial officer sign. I suppose in a smaller organization with few people in management, you could get by with just a board member, but certainly just having the chief executive officer sign in a case of a small not-for-profit organization, I think I would prefer to have both. I would have the president, the member of the board sign, and the chief executive officer or the general manager or whoever it was sign. I'd like both people to sign. Now, the concern we always have in a compilation is third parties, that someone, a third party, will assume that it is an audit, and someone will sue us on that basis. And that happened before in the old notice to reader days too many times, and it happened even though we were not supposed to do, or it was recommended that we not do a notice to reader if there were third parties. Now, standard setters have decided we can do compilation engagements when there are lots and lots of third parties, so we are in much greater risk position than we were before when we weren't supposed to be doing them at all when there were third parties. So that's always a concern, that we're going to be in court with a lawyer saying, well, I think you really did an audit, it looks like that, I think you're responsible. So you're now in court because someone, a third party or a member of the NPO, have suffered damages because the statements you were involved with are wrong. And what happens? Well, the lawyer says, why did you include note 1 on the basis of accounting? And what work did you do to be sure that it was right? And you say, well, note 1 is required by standards and it is self-evident. No work was done or is needed or is required. Now, that's actually the correct response. No work is needed or required. And that's why I would recommend when you're writing note 1 that you make sure that it's absolutely self-evident, which note 1 was in this circumstance. But then we move on to note 2, where the lawyer asks you the same question on note 2. And you say, well, it's not required, but I included it to provide more information to the users. Oops. And the lawyer goes, aha, and you're in trouble because you now admitted some level of responsibility to third-party users when you're trying to deny that you have any. And then the lawyer says you apparently made journal entries. Please describe the work you did to be sure these were right. And presumably you were in court because one of them was wrong or missed. And you go, oops, I didn't make journal entries. I only proposed them to the client and the client approved them. The lawyer says that's not what the letter you drafted says. Now, what would then happen if you had included extra bonus notes or extra bonus words? And the lawyer will say, well, you say you have no responsibility to these third parties who have suffered damages because of errors in your statements. And you say, under professional standards, I have no responsibility to do any work, and I do no work, and this is an engagement letter. To which the lawyer will probably say, well, the third party didn't get the engagement letter, but never mind. Then the lawyer says, well, why did you include a note on the makeup of long-term debt? What work did you do to verify that this was correct? And you obviously knew that third parties were relying on the financial statements. And you go, oops. And then they say you also included a note on subsequent events. Obviously you knew third parties were relying on the statements and were interested in subsequent events, and your note is incomplete. What work did you do? Oops, none. Why did you include in the report reference to the fact that another accountant compiled last year's statements? Well, I wanted to emphasize that I only have no responsibility for last year. I only have responsibility for this year. Oops. So I don't like any extra bonus wording. I like wording to be very carefully done. Don't like notes of any kind. I don't like note 1, but it has to be there, so we have to be careful with note 1. So as a CPA doing a compilation, particularly if there are third parties, you need to be very, very careful and not include extra bonus stuff that will allow a lawyer to argue that you appeared to take a greater responsibility for the statements than none, and that you did no work when you knew you should have done some work. Now, again, I have another module on compilations, but this particular experience with this particular NPO AGM emphasized to me that as a practitioner, you need to follow standards exactly. The report needs to be exactly the one in standards and needs to correspond exactly to the statements you produce. No extra bonus statements, no extra bonus notes. Now, one of the frustrating things about this standard is there's lots of work, time done and spent getting engagement letters and doing this and that and the other. But none of the work or time you spend is for the purpose of gaining assurance. None of the work or time is to make sure that the statements are right at all. So you have absolutely no idea whether the statements are right or whether they're appropriate for third parties that are using them or whether there are third parties at all. So you do no work and have no appearance of doing work. And you do only what the standards require, no more. Because if you start to do additional stuff, a lawyer will say, well, you obviously knew that people needed more information and assurance, and so you started to do that, but you didn't do the extra stuff you should have done, so you're liable. So no extra bonus additions. And great care if you were aware that there are third parties, because now I have talked to bankers who knew exactly what a compilation or a notice to reader meant and how much assurance they could derive from it. None. But I've also talked to bankers who thought that it was on the letterhead of an accountant, and audits, reviews, and compilations were all the same. The accountant had made sure that the statements were right. So great care if there are third parties, because an awful lot of third parties don't understand the distinction and they don't get the engagement letter, and perhaps the client was unaware they were using the statements. Great risk. So the risk to the CPA, this had been me, I would have been embarrassed. Kind of gave the appearance of being an auditor, certainly gave the appearance of lack of care, and I don't think as a CPA you want either of those things. So we need to pay more attention to compilations, even though theoretically we have no liability or responsibility of any kind whatsoever. If we make mistakes like this, clever lawyers can argue that we do have a responsibility. So we need to be careful. Thanks for listening.